Hi guys, welcome back to another episode of Stock Talk. If you are new to my channel, my name is Julie, and in today's video I want to talk to you guys about 3 undervalued growth stocks. Now, if you guys been watching the stock market, you notice that growth stock and tech stocks in particular have been selling off greatly lately. So what I like to do is go and take a look at these stocks that are oversold and pick them up. Now, I'm not the only one thinking that these stocks are undervalued. Analysts are also saying that these are undervalued. That's why I want to go ahead and share these stocks with you guys so that you can take a look at them for yourself as well and see if you might want to pick them up. So let's go right ahead and take a look at them. Alright guys, let's dive right into it. I have 3 particular stocks that are currently down anywhere from 50 to 78% from their recent highs, but in my opinion still look very attractive. The first one on my list is Pinterest. If you're familiar with Pinterest, you know that Pinterest makes its money through advertisers, and they had an incredible year in 2020 when the pandemic hit because everybody was at home, posting ideas, sharing ideas, looking for ideas, and advertisers were paying quite a bit of money. So you can see the stock had a really nice, incredible run from $10 to about $90. Looking at the chart, you can see that it has been on a consistent downtrend. And I think this is mainly due to the fact that the economy has reopened and a lot of people are spending their time elsewhere other than on Pinterest. And additionally, advertisers are not advertising as heavily anymore due to the supply chain disruption because there's really not much to advertise when you can't keep up with demand. However, what people are failing to see is that Pinterest was trading at a price ratio of 8.8 back in 2020 when it was trading at around $20, but they were only making a revenue of 77 cents per user, which today they're also currently trading at a price to sales ratio of 8.8. However, the average revenue per user is $1.41, so that is almost a 50% increase. Additionally, even though the active monthly users have declined by almost 24 million over the last 2 quarters, there has been a growth. Back in 2020, they had roughly 367 million monthly active users, and today they have 444 monthly active users. So that's also a nice increase over the last couple of years. If we take a look at their analyst forecast on here, we can see that the average is $51. So that is still a 54% upside from where we're sitting at right now. And if we look at their earnings, you can see that the last several quarters, they have always beaten their earnings. So we also have earnings coming up on February 9th. So I think we definitely should keep an eye on that because that could make or break the stock. So in my opinion, looking at where we're sitting at $33, this price target looks very attractive because based on the analysts, we have at least a 50% upside potential. So let me go back to the 4-hour chart. And so if I look at this chart, it looks like the $34 is now the new resistance. So I definitely would want to wait and make sure that Pinterest can actually get above $34 and stay above $34 and kind of build support around $34. So that would be my strategy to make sure that it stays above $34 before I did enter the stock. Now, the next stock on my watch list is Fiverr International, and the ticker for that is FVRR. Now, if you're not familiar with Fiverr, Fiverr is an Israeli company that was established in 2010 and is actually an online platform for freelancers. So if you are looking for a skilled freelancer, then that is your platform to go to. As of September 30th, 2021, they had 4.1 million customers with a range of services in over 160 countries. So that is quite impressive. Now, Fiverr is one of the companies that definitely benefited from the pandemic. As you can see, it ran from $17 to $336. I think that's almost like a 2,000% return on your investment. How incredible is that? Now, of course, it has come down quite a bit. It's been down roughly 78% from its recent highs, but that is great for people that are looking for stocks that have been beat down. And I think this stock definitely qualifies for a stock that's been beat down. Now, the current market cap of this company is $3.33 billion, and they are currently valued at around 9.4 times this year's expected sales. So let's go ahead and take a look at what the analysts say about this stock. So let's go ahead and take a look. So we can see that they have a price target anywhere from 120 to 205 with an average price target of 159. So sitting at $88.96, that's a 79% upside potential from here. And they are giving it a moderate buy rating. Now let's take a look at the earnings. And we can see earnings is coming up on February 16th. So definitely keep an eye on that. Because that will be definitely important to see if they beat the estimates. Looking at the past earnings, we can see it has always beaten the estimate forecast, so that's definitely great. And currently we have an EPS year-over-year change of 58%. Now, as far as my strategy for this particular stock, I would not just enter blindly anywhere. So let me go on my 4-hour chart. So as we can see, this has definitely been on a downtrend. So I would want to wait to see support and then see a pattern of a reversal before I do enter the stock. But nevertheless, this is definitely a nice stock to have on my watch list. With employers opening up to the idea of hiring people from sites like Fiverr and letting their employees work from home, I think this is definitely a company that we should keep an eye on and see how it performs in the future. So the third stock on my list is Lemonade, and the ticker for that is LMND. Now, if you're not familiar with Lemonade, Lemonade is a startup insurance company, which would make this stock the riskier stock out of the 3 stocks because it is a startup company. And the company IPO'd in July of 2020 with an IPO price of $29. But as you can see, it ran up all the way to $188. So what a great return. Now, ever since it has come down, obviously quite a bit, and it's sitting right now at $34. So this is over 80% down right now. However, the analysts are giving it a price target anywhere from $35 to $95 with a medium of $60. That's a 71% upside potential from where we're sitting right now. It does have a hold rating right now, but let's go ahead and take a look at the earnings. Now, being that it's a startup company, we can see that we had negative earnings, yet it has beaten the earnings estimates most of the time. And it does have earnings coming up in February, but it's going to be towards the end of February. So we definitely want to keep an eye on that as well. So this company is heavily investing money on their growth. And it's not showing profitable just yet. So a lot of investors, I think, are shying away from this company because they want to see that it's profitable before they invest their money. And I can't blame them for that. However, to me, the risk to reward ratio is pretty nice. We just saw what the analysts are saying. And given the price point, I think $34 is pretty attractive. I even would consider selling puts for this company and acquiring shares that way. If I look at the 4-hour chart, it looks like $34 could be the support line. So I definitely would want to see a few more points that it bounces off $34 and stays above $34. But I would even consider selling puts. And let's say we go out to March, I could sell the $35 strike. Or if I want to be a little bit more conservative, I would go to the $30 strike and sell the puts and actually would collect a premium of $260. Now, remember, when you sell puts, you do have to have the equivalent of 100 shares of money in your account. So if the strike is $30, that times 100 would be $3,000. So you definitely will need to make sure that you have $3,000 in your account so that you are selling cash secured puts. I would definitely not sell naked puts, only cash secured puts. Actually, my price point at that point would be $27.40 because if my strike is $30 and I'm getting paid $260, so I take that off, so that's $27.40. So that would be actually my price for the stock. And I think that's a definitely cheap price for owning Lemonade. And I do know it's a startup company, so there is risk involved, but no risk, no reward. So I hope you guys enjoyed this video. I'm interested to find out which one of these 3 stocks you guys are interested the most and like the most. And if you're considering putting them on your watch list and even considering opening position in them. So if you don't mind, let me know in the comments below. I would be happy to hear back from you. And of course, as always, this is not financial advice. So be sure to do your own research on any of these companies. And be sure to hit that like button and consider subscribing to my channel. I greatly appreciate that. And I look forward to seeing you guys in my next video. Until then, bye-bye.